Okay, so this one is going to be about backtesting, and it's much more about what I've learned about backtesting, what I didn't hear anybody even say that or even mention something like it. And I believe that there are many people who might have who talked about it, but anyways. So when we get to the trading space, the first thing that we see is that everybody keeps saying like, okay, find your strategy and then backtest it, build the conviction, build the belief that the model is working, and actually see it working in a real, in real, in reality. And the problem is we purchase the trading view strategy, trading view subscription, and then after we purchase the trading view subscription, we get into the replay. And many people do that while they still do not understand what they are doing, like at all. And this is what I did. I don't know, maybe somebody else does it. Honestly, I'm saying like everybody's doing this. This is my assumption. I'm not sure, but probably they do. Even or most likely, as others say, they just start trading right away. But anyways, if you are at the stage where you are backtesting, um, how to do that, how to do that properly so it actually develops your model and you are not just building a conviction in something that does not exist. So my backtesting goes is separated like this half a year. I was developing the idea of how I want to backtest and how I want to backtest so it actually makes sense. So um, the backtesting starts, of course, with the modal. So first of all, I find some modal, or maybe from my personal observations. But your modal from your personal observations comes after you actually backtested some other modals and you understand that you can make them better. And subjectively you make them better for you, and you objectify them with your own criteria and your own variables that you create. Because you can think that there is some professional in the market, but it is all subjective. If I give you the model and let you trade it, then this model is going to be traded by you, and now it's most likely going to be a completely other model because you're going to be seeing subjectively things that you believe are true, and I'm going to be seeing something else because our whole mind and all then how we see is all different. Everybody has their own points, their own energies that even influence ones. So everything is absolutely subjective. So but there I can just share my process and how I actually get to do it right now, which actually helps myself. And maybe there is someone who believes that, who finds that useful and it helps in a journey, then it's fine. If you do understand that, congratulations, you can go and continue doing whatever you're doing. If you don't understand that, congratulations, maybe this is going to help you. So I separate the process in three stages. So the first stage is when I'm actually looking at the chart and I'm marking all of the zones from my strategy, and I'm trying to understand what was the most perfect case scenario that I could have taken. Like the most ideal entry that I could have taken and where I could have gotten out, and according to the idea that I have. And I do it for 50 to 100 times. Normally, like 50 logs for me is enough to build some conviction and everything, but I always try to push it to 100. And right now I'm in the process to pushing every single modal that I'm backtesting to 100. This modal that I'm testing right now is USD It's a range breakout strategy that I have coded. I got it from Rene. I guess his name is pronounced with a little bit of French accent, but whatever. Rene, he is creating the algorithms and he shared it. And I'm very grateful for him sharing this strategy because it's actually working for me. And I have coded this strategy, and right now it's running online for the Alpha Capital Prop Firm Challenge. So this is a range breakout strategy where we basically have the timeline is actually very important. Not the timeline, but the time zone is very important. So it's UTC plus 3 in my case. And I'm measuring the 2 a.m. to 3:30 a.m. range. and then I'm entering the breakout into the side of the breakout. So in this case, it was shorts. In all of the other cases, it was like longs, whatever, it doesn't matter. The entries here, the stop loss in the opposite side of the range, and the if, for example, the price breaks out and then returns, it's going to be I'm going to be taken out in loss, but then the breakout is going to also enter the other side, because many times the price can just be ranging, and maybe the first breakout is going to be like a liquidity grab, and then it just reverses and continues to into the other direction. Sometimes it can do both, even before I wake up, because this is the early morning session for me. It's I'm in Central European time, so basically this is going to be at night for me. So I'm going to do to create this example, for example, like this next day, and potentially we are going to, let's log it so you can see. Also, I didn't finish. So 3 stages. The first stage is I'm looking in hindsight. So I'm basically looking for the modal which reappears every single day that I can hard code in this case, and that I can repeat every single day. For the algorithm, I'm looking for as simple modal as possible, because the more indicators you add, the less profitable the modal tends to become, or less longevity it shows. So in this case, I'm showing you the modal for the algorithmic trading, but later on I'm going to, honestly, you could trade it yourself. And I'm also going to show you the other modal that I'm actually trading every single day. It is way more complex, so stay tuned. That one is going to be pretty insane, because there were so many variables that I was able to add into to create it completely. It is also going to be a range breakout, but it's going to be a range reversal. So okay, over here I'm marking the high and the low. I'm using the Fibonacci here, just a little bit changed Fibonacci, and I show it as a range range breakout. That's the name. Opening range high, range low. Then here the price is actually, here is going to be the example where the price is actually taking us out into a loss, and this is good for data. I need to know what actually happens, what exactly happens if I let it play out by itself. And the second trade is going to be here. Oh, honestly, there is just 2 losses. I need a better example, because here is exactly the time when it didn't work well. Okay, let's go for this one, because here's going to be a loss and then a win. Again, I'm not selling you a strategy. This is the strategy that I believe in, that works for me. And if you don't like it, that's all fine. I'm here to explain how actually the backtest can be useful. So when we are backtesting, we need to be looking for variables that influence our profitability. And by that I mean it can be a day of the week. Maybe, for example, like we get 100, we need to look in terms of longevity. For example, if I have 100 trades and every single Friday my setup keeps not working, then maybe I need to skip Friday. This is the framework that actually allows you to build a profitable edge. And then you're thinking, like, for example, I'm marking also the range. So the first thing, we are marking the range. Then I want to see the size of the range. Why? Because this model, for example, shows me that if the range is less than 25, most likely I'm going to lose money. In this case, it's actually 36. Again, it's all probable. It's just probabilities. It's not hard coded. But for me, later on, I can understand what are the odds. What is the probability of something happening when of a profitable trade panning out with these variables. And later on, when you get professional with this, you can be having a better and better probability in percentage wise, and have more conviction in your trade. So basically, as for here, this was actually the range breakout. This would perfectly work with another strategy that I'm trading, but let's go and see this. So here we are. So that's our entry, and that's our stop loss. So here we are going to be in $123 in loss. This is going to happen while I'm sleeping, so that's fine. And for me, it is okay, because then this model is going to cook. So first things first, I'm mentioning which day it is. It is Tuesday. Then I'm marking the size of the Asia range. Not the Asia range, but of the range at all. But yeah, it is technically, it is Asia. Then my entry was at 3:30. I'm marking that because I can understand at what time I can expect the trade to pan out, and many times to appear, and many times they repeat. As you can see over here, it's like 3:30 happens many times, and then later on, this whole information I take out as a CSV file, and then I send it to ChatGPT, and ChatGPT actually helps me to count all of the probabilities of each setup. And I just keep asking questions. I've tried to disprove my strategy, and I keep asking provocative questions about the strategy and try to make it think, right? So as for here, I would wake up, I would already be in loss, but I would already be in another trade. So if we take a look here, but let's start with the loss. So next thing, I mark where the trade was, at what time the trade hit the stop loss. It was 5:15. 5:15 a.m. 5:15, it goes here. Then I mark whether it was a manual close or the algorithmic close, or it was a hard-coded. It was a hard-coded close, because many times when I open the chart and I see the bullish structure and I am in shorts and I am in profit, and the price is reversing on me. So for example, if I woke up over here and I see that the price is reversing on me, I would of course close the trade. Maybe not here, because it was not like 100% obvious. Maybe it was a little bit obvious because here was the liquidity grab, but anyways. Okay. But many times I would just close it. Then I mark whether it is a win or loss, and I'm using Notion for that. By the way, if you need that, honestly, you know, I wish I can share the table, the database template, but when you are developing your own model, you need to have an ability to create your own database that is going to provide you with all the variables and with all the information that you need in order to make it better. Because why are we adding the win rate? Because we understand, like, there are going to be other variables that are going to influence the win rate. So for example, if here I would add the break even, like like stop loss to break even after the price hits a certain range, then I would be fine. There wouldn't be any loss. But at the same time, not always the price delivers. So basically, we are trying to understand what kind of modification is going to make the strategy more or less profitable. Again, we are not trying to overfit it, but we're just trying to play with the odds. So our multiples, it's going to be 1 minus 1 R, and it's going to be minus 123. Again, here I'm using the standardized lots, so I'm always entering 0.5 lots because I know that Asia range is not that big. The maximum drawdown that can be maybe like this range, not the Asian, but this range, normally is not that big, and the maximum minus at that maximum drawdown for me is going to be like $200. I know this is risky, and potentially I'm going to code it so here I'm only risking $50 to maybe like 60 to 100. But let's see for now. That's not what we're talking about at this moment. But anyways, for the consistency, yes, of course, it's better to make the stable risk. And for you, if you're trading this discretionary, it should be a stable risk for sure. So your 1R should be $25, $50, $100. Depends on what kind of accounts are you, size of an account you're trading. Normally 0.5% or 1%, depends. Risk, and again, 123, I'm just mentioning because if I can see that my risk is on average too big and my account cannot hold it, I need to lower the size, or I need to decide how am I need to hard code another risk management, and the same I would do for the discretionary trading. Here's the date. I moved it because I was reviewing the data and I needed it on the other side. So it is 11th of March. It's Friday. It's Friday. No, it's Tuesday. Tuesday 11th. Okay. So it is March 11th, Tuesday. Fine. Then we get to the other thing. This is the best time to check. So as long as this is the algorithm, again, I'm showing you this as the algorithmic example, but it is all the same if you enter the position and you're holding it through the day, so you're doing the day trading, not the scalping. It's actually just the same because you can set and forget, and then you know that at certain time the price is going to have a movement, going to have some sort of movement. For me, it's not even 9:30. Normally I thought that, like, here we can see that 3:45, 4. This is going to be around 9:30, the New York Open, right? And the delivery happened right at this moment. But many times the price, as I statistically see, the price would move at 5 p.m. or something. So the next thing we see, best time to check. I'm not going to actually input this because here we had a loss. There was no best time to check. Even like I wouldn't wake up at that time. Best time flat. It's actually if I decide at what time it was the best time for me to close the position. And over time, when I'm collecting all this data, I understand that, hey, I can hold my positions longer. Because many people are asking, and I saw, not me, but I saw online and looking at the live streams, I saw people asking, how can I trade, how can I hold my trades longer, and how can and I was interested myself, so there are so many things that you can build as a conviction for you to understand that you can hold this trade longer. It's not only price action. There can be thousands of things, and I'm going to show you some of them. But in this case, it's just a time-based entry. We time-based exit. So we exit the trade only at a certain time. And in this case, we exit at 7 p.m. As for now, my algorithm is set to exit at 2. So it's basically here. But I want to change it for 7 because there are many days when at 7 p.m. the price delivers just so beautifully. And it's just in this modal. For example, if I was trading NASDAQ, I wouldn't be holding because many times just at the New York Open, if I entered in the morning, then at the New York Open, there's going to be a delivery already, just right 9:15 or something. But again, as you can see right now, we are doing backtesting, but we are not trying to predict the price, but we are actually looking at what the price did. Because when we're trying to predict the price, we're actually making like It is also good because this is the next stage. After we know all the odds, then we are trying to hard code these odds into our execution. And then we are actually using the market replay in order to get into the position. But first of all, we need to collect data and collect the conviction that this is happening. Then we need to build this conviction into the skill. And then after we build this conviction into a skill, then the third action is going to be actually using this online, basically in the live markets. Again, let's continue. There was no best case scenario. Normally I write my notes over here, and then I'm also checking whether it made sense or didn't make sense to enter the second trade. And then I can build rules for myself. So for example, if my first trade delivered, then I don't need to be greedy and try to wait for the price to reverse. Many times if my price delivers easily, there is not going to be any reversal. And if it's going to happen, it's going to happen tomorrow, but tomorrow I'm going to be having another range. And again, I found this information from backtesting it this way. Like literally sitting down and looking over it when the price already delivered first, and then only moving to the market replay. Then I'm also adding the screenshot because this is going, and again, why are we adding screenshots? There needs to be a day when you come back to those screenshots and you look over all of them. Like this data was not collected for you to look at it once. This data was collected for you to later on make it better. That's why they say, I didn't understand at first why they say like lifelong modal or whatever, like lifetime modal, whatever. So this is basically a modal that you're going to be using for your whole life. I didn't understand why they say that, but it is basically a modal that it means what it says. It is a modal that you're going to use for your whole life. So that's basically something that is worth developing, that is worth coming back to. So okay, for this any loss, I say that this is the C setup because many times I couldn't even do anything. Then since it is the same day, I'm just going to duplicate, but a little bit adjusted. Asia range was 36, and then my second entry, I'm going to, I'll move it here and add another entry. The second entry happened at 5:15. Stop loss again here. I'm still sleeping, by the way, at that time. So it's around 8. It's 7 my time and 8 on the chart. So I'll be in a little drawdown at this point. Okay, let's start. So the entry happened to be at 5:15. 5:15, I don't have it. 5:15 a.m. There is a more efficient way to do it, and of course I do it in MetaTrader. The problem is, when I'm doing this in MetaTrader, it doesn't help me to believe that the model is working. If I'm backtesting my model really fast and I just want to know whether it's profitable, yes, I do it in MetaTrader. Then I understand which actual instruments are working the best, but then I still need to go through it manually in order for myself to believe that this is going to work out. Because if I don't believe in that, then why do I need that? Then it's going to be hard for me to stay in a drawdown, and I wouldn't understand why am I staying in a drawdown. There wouldn't be any conviction for me to actually hold the trade, to stay in that trade, and to be in the trade at all. Because when you wake up and you're in a drawdown from the algorithm, or if you get into the trade and you set it and forget it, and then you come back and you're in drawdown, you need to understand that you're going to get out. But you need to have some strong conviction. Again, here, of course, we need to do the top-down analysis and everything. I'm just saying how to backtest it and how to create an edge in this case, and how to backtest it so it actually helps you. Maybe you can take the framework of mine or whatever. So time for the exit. We have a hard-coded exit at 2, and I normally mark it this way. So I say that at 2, there is going to be an algo flat. So we flat all the positions at 2. What was the best exit time ever? It happened at 4, and I mark it 2. It's the best flat because it would provide us with the best risk reward with the most profitability, right? And the one that happens to show up the most is actually the one at 7. 7.15. 7.15 shows up the most as basically the balanced one, but many times it just delivers so much that it's not to compare. In this case, it didn't work out, so I'm not going to be marking that. But what I can mark is that at what time I could check the bot and be in the most profit to close it manually, because I allow myself to close them manually, or maybe move the stop loss in profit or something like that, because I'm still managing the system, right? Even though it runs without me, and I know that everybody would that most would say that you need to just leave them and then tweak them. It's more of an active thing for me. I choose to do it this way. So that's what was the most perfect time when I could check the trade. Basically, it was like at 4 p.m. Normally, many times it is 5 p.m. But in this case, it was 4 p.m. So let's set up the data. Now we need to change that. It's going to be buy. Then we set the limit order here, stop loss here, buy limit here, and take profit here. So we can see we were risks, okay. And we exit the trade at 2. In this case, by the way, I wanted to already change to 7 p.m. Why so? Because all these previous trades, this 35 trades, showed that if I'd only hold my trades until 7 p.m., it would bring me 2 times more profit than the other times. So maybe not 2 times, but somewhere around that. I'll say that it's an algorithm, and also I think I'm going to add this separator, and I'll just separate it from here and from here, and flat 7 p.m. And from now I'm only measuring. From now I changed my algorithm, and from now I'm looking to flat at 7 p.m. So in this case, I'm going to just move it 7. This was not the best in this case, but this is the best overall. I can allow myself to come to the charts at 4, for example, and just see my position and exit it if I feel that this is not a best fit for me. But to do that, I need to understand at what exact time it is most likely to be the best price delivery, let's say. Okay, so 0.5, in this case it is a win. Then I say the R multiples, it was like 133, and my profit is $170. Later on, I can take this information and while talking to a ChatGPT, I can ask, how can I lower my position, or what kind of tweaks I can do, and that actually makes so much sense later on. So what was my 124? Okay, 123, fine. March 11, it's still March 11. And then best time to check. The best time to check was actually 4 p.m. So it was 4 p.m. I cannot say right now what is the best time for this strategy to come and check, but the one that happens to appear the most times is 5 p.m. Okay, best flat time. Best flat time was actually 4 p.m. I also mentioned that. It will be 4 p.m. Why this is important? This actually tells me how long I can hold a trade, and when is it best to actually flat all my positions. Because sometimes I don't know what to do. Maybe it's going to deliver more, maybe it's not going to deliver more. Maybe it is even RSI here showing that it is overbought and it makes no sense. Maybe I'm using the VWAP, for example, to understand, oh, it's actually it actually touched minus like 4 standard deviations from the VWAP. And oh, there is potential reversals that is going to happen. And I'm building a conviction like this. Again, I didn't add the VWAP, but look at that. There is another rule that I could have created. I would say, hey, if I'm not sure if the price is going to deliver any higher, then look at the VWAP. If it actually touched the 4 or 3, then this is a potentially a good place to cut your to flat your position, to close your position in profit. And I think I'm going to add it, and I'm going to look over all of my just right now while we were talking, I was able to create a new rule that is going to help me in my trading. And this is how I understand, and this is how I think it is right to do. Again, I don't know, maybe it is written in some book, maybe not, but I came to realize it myself. Yeah, maybe everyone understands it, and maybe I'm the only one who had to struggle to understand this. But well, I don't really care. It works for me. I'm sharing because I want to share, not because I need anything. Again, 297 would be the perfect. 297 would be the perfect and close. Why am I not using the wick? Well, because if it closes on the 15 minutes, then it's going to close at the close. So the candle started here and it closed here. So it's not going to use the wick, and there is no ability for me to catch that. If it's algorithmic, if it is discretionary, then potentially I can catch that, but anyways. Best are multiples, it's 2 to 3. 2 to 3. Again, many would criticize that, and they would say, oh, you are creating a conviction in something that is really hard to do. I like it. And it actually makes sense when you do it many times. If you do it over and over and over and over again, you have so many reps that you start to feel that it actually makes sense. Again, I don't think that I'm even near that, but I can see that there can be a progress with that. So, okay, I do have this information. That's everything that I need, and I just download the image. I load it here, and I'll say that this is the B setup. How do I determine A, B, or C setup? This is very interesting because many people are like, oh, this was an A setup, or you discretionary traders, you don't understand what an A or B or C setup is. Well, motherfucker, maybe you can explain what the fuck is that, right? Well, as for myself, how I personally understand that, the less pain, the higher rate. That's for me. For example, C setup, it's the most pain. It's basically either a loss or the trade was all day in a drawdown and I was waiting for it to go out. Again, I try not to be emotionally involved in that, but sometimes I can wake up and there's going to be like 2 or 3 trades in a drawdown already. And this is fine. While it is coded to be fine for me, still it is not. We as human, we don't feel very happy when bad things happen. But this is all subjective. This bad thing leads to a good thing. And there are many times when you can hit even 2 stop losses and the next trade is going to be the best. And if you can just shake off all the I don't know, like all the sadness, whatever, all the emotional output that you had within yourself and understand that life is very subjective and everything that is bad is actually pretty good for you, and it is everything is just mixed up in life. Whatever you feel like good, this is actually a slow poison that actually makes you weak, and whatever you do that is hard actually makes you stronger. So it is best to do hard things from the very beginning, right? Yeah, so that's what we have. Then after we go through all of them, we export the data, we send it to ChatGPT, and we just ask, create an edge from this or whatever. And then when it creates the edge, maybe it's not going to be the best one, and you keep asking questions about every single variable you had here. So what I'm going to do right now, just while we are talking, so I don't forget, I want to add one more thing. Best time to check, but also maybe over here, R multiples, P&L, maybe range. I'm going to add the VWAP, and I use it already for another strategy. I think it will be like this. It will be VWAP for entry. And then I duplicate that and VWAP exit. In this case, not a status. Come on, select. I'm gonna be measuring where I entered and how far the price actually traded. And potentially later on, when I collect enough data, I'm going to understand how to use this data for my strategy and how to make it better. Or I'm going to understand that this actually makes no sense in the long run. Either of two. Because sometimes I'm adding new, like for example, I was adding the stochastic and MACD for the other strategy that I was doing, and I understood that RSI is basically enough. I don't need to overcomplicate it. And maybe even RSI, I didn't need that much. I just added it to build a conviction because, you know, this is what kind of person I am. Okay, I'm going to show you the other one, also the other strategy that I'm backtesting, and then Asia sweep. Yeah, this is the one. London reversal. Why is it said that it's a London reversal? Well, let's say, let it be the London reversal anyways. 25, but this is not the one. 25, I have more. Asia range, NAS, this one. Okay, 50 trades, this is the one. Press here, close. Okay, great. So I have here the strategy statistics, strategy metrics, and all of the stuff that I need to be checking. And I'll just show you what I'm actually doing here. Let's get to something that I already did. For example, here this was a very, very profitable trade for me on. It works best for me on 5 minutes. On USD JPY I was using 15 minutes, but that's only because there was no data for the 5 minutes, but I would use the 5 minutes overall. So the strategy, standard deviation, yeah, okay, this is what I'm using. So this is another strategy that I'm using for the day trading, and this is the US 100 cash. So I'm just trading the index here. Well, the strategy is pretty simple. I'm waiting for the Asia to form, then I'm waiting for the Asia sweep. Normally, this was the Asia sweep. As much as it was very little, but we were trending up overall, so it was safe to see the accumulation here and just enter longs here. So I don't know if I actually I didn't add this data here. Well, okay, let's add this data right now. So this was Thursday 10th. So it was Thursday. I didn't add this data yet. Was July, which day? 10th of July. Now, what are the variables? I have three setups that are likely to occur. First one is the Asia high. So it's basically when the price takes the Asia high and reverses to the downside. Then the Asia 50%, it's basically when the price is already trending in one direction. It retests the 50% of Asian range and it just continues to the upside. This is basically the ICT London Silver Bullet. London Silver Bullet and then other stuff. And then Asia low. This is what happened here. So I'm marking this is the Asia low. And then later on, I can take all this information and understand which setups are forming the most the most amount of times, right? And how far the price travels, what is the size of the move, and everything, and how long I can hold it. Then I'm looking at the market structure. So the market structure would be for me is the MMBM, market maker bimodal. It is the reaccumulation of it. So I'll say that this is MMBM, market maker bimodal. Then the Asia size, actually here the Asia range matters. If it is too small, most likely this is the day before the FOMC or before the CPI release or something like that. This is the market makers are accumulating orders and now it's going to explode to one or the other direction. You need to go to a higher time frame and actually understand the conviction behind this all. Create your conviction and then enter maybe swing trade or something like that with a wider stop loss. Or like here, for example, this was enough for me. But again, I'm trading in I'm in Central European time, so for me it's the best model that I can take, because if I wait for 9:30 and there was way better move to be taken, it actually takes I'm tired already at that time. If I keep sitting for 5, 6 hours, 7 hours, then on New York, most likely I'm going to be making stupid decisions. That's the reaccumulation. I don't know which phase it is. I need to zoom out. I don't want to do it right now. But anyways, there was a sell side liquidity that was actually sexy. But again, here was this huge order block. Let me call it the way I want to call it. Okay? Because we know that there's so much thing, but you just need to understand that it's if you don't like it, how things are called, just need to understand that it's basically all subjective. Objective reality doesn't really exist at all. So okay, bullish. The bias was bullish. Okay, we say that it's bullish. We were in the approximate discounts, but again, if I had a footprint chart or I had the volume data, then I could say that we are in discount. The only thing that tells me that we are in discount is the VWAP, but we are in a very, 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 very little discount. Very little discount. Yeah, again. Then side we take a long. Then what do we use to enter? What levels do we have? I normally use in this case, it is I say the OTE, and that's it. Because the price just stayed at 0.705, 75%, okay? 75% of standard deviation, so it retraced 75%. Then SMT divergencies. Normally, I do have SMT divergencies turned on here. I think my Mac is gonna die right now. Give me a sec. I don't see any SMT divergencies, so I need to refresh that. Luke's SMT divergencies. There were some, but historically they don't show up, so I need to refresh that. I don't want to, because then it's going to be a mess. Then what I'm looking at is the PO3 setup. Basically to see that I need to enter this. And I look at these high time frame candles. I have my weekly candle, I have my daily candle, I have two daily candles, because basically my bias is all about understanding what happens one day before. So basically, if we took the high of the previous day candle and we reversed, then I'm going to be bearish. If we are in the range, then most likely we are going to continue after retracing to the 50%. Right, then 4 hours. I want to purchase at the wick, and then and sell in the end of the expansion. In this case, we had the lineup. The wick is creating. It is 2 a.m. So the 4-hour candle, the new 4-hour candle and 1-hour candle opened. And right now, if it opens and the price goes lower, which it didn't go far, but it did go to maybe 79% of that wick, right? Now, after that, I can have a conviction that the price can finally continue up, and the accumulation here is going to end soon, and there's going to be an explosion to the upside. So then we have 1 hour, 4 hour. So PO3 line up. I'm just looking for this 3 candles to line up together. Of course, the wick is ranging, but this is actually the best case scenario for the ICT type of trading. Then we look at the RSI. I look at the RSI. Normally it's, in this case, it is 35, which is enough. But at the time of entry, it's actually 39. Let it be. 39 can be. It's best when we have things like oversold, and then the step up a little, like the same as here. We have like a little retracement to the OTE, and we can see the same at the RSI, and then this is the perfect time to buy. This day I was actually trading on 1 minute, and the accumulation was so long. I don't know. For me it was like hours, but honestly it was not as long in reality. But anyways, so we see the lineup. Then I was checking the EMA lineup. So David Green, I was on his video, whatever, I don't know what it was, webinar on wealth charts. When I thought that they accept Ukrainians, I wanted to be a part of it, and I was only starting my trading journey, and I saw him explaining how he's trading the 9 period EMA with 15 period EMA crossing, and then he trades, depends on where they cross and in which position, then he trades to, for example, the downside to retest the 200 EMA or 65 EMA. So basically he's using 200, 65, 35, 15, and 9 EMA. And I can show it to you. I don't have it here. Okay, no, I don't have it here. And here, I think I don't have space to add it. Okay, let's add it here. I basically coded it. So it's EMA. So you can see it's max retry here. Trend. Basically, the white one, I normally change it a little. It's black. 200 period EMA is the black one. 65 period EMA is the violet one. Then 30 period is orange, not orange, whatever it is, like yellow. 15-day period is the blue, and 9 period is the red. So basically, if the price is above the 200 EMA, which is the support, right? We treat it as a support, and above 65, and then there is a, like, they cross, then it is a safe spot to enter the longs. So this basically would happen here. But after they cross, you wait for the retracement to the 35 or 65 or 200, and then you buy there, and then you're just waiting for as much as you're waiting until the price touches the 9 period EMA or something like that again, and you just exit. So the idea is pretty easy, and this indicator works well, but you need to have a conviction, and you need to have like the idea of what the price is doing. I need to recode it. I'm actually gathering the information from it, but short entry and long entry are actually mixed up right now. So it's basically label up. Here should be label up, but not on entry, but on exit. So exit, you need to make it green. Here, label up. Long exit, you need to make it red, and label down. And then it makes sense. You see here, right, exactly where the crossing happens. It notified that you need to enter. Again, this just happens. This just helps you to see what exactly is happening and when to pay attention to enter, but it's not exactly telling you that this is going to be profitable. You need to have some conviction behind that. So before, I would use that just to have it as a confirmation for me. Again, I'm not saying that it's working 100%, but it can be a profitable strategy. Anything can be a profitable strategy. And honestly, that strategy shows itself profitable, but I need to recode it. So I'm going to work on that indicator maybe this week. This week for sure, I'm going to redevelop it and make it a little bit better. Okay, so what is next? EMA lineup, I'm not using it right now. Then let's go for the VWAP. VWAP, it was at -1. I say -1 everything that is below the VWAP. So -1 standard deviation below the VWAP. And then I say, how far did it go? So let's see, how far did it go? Retracement to 50%, and it continued delivering. And I'm saying the best case scenario. How far did it travel? It did travel to 3 standard deviations. Actually, if we look at it in the retrospect, if we see that, if we check it, we can see that many times it travels to 3 standard deviations, or reverses from 3 standard deviations or 4 standard deviations, or somewhere over here you can be looking for the reversal. And a VWAP, I would say that this is one of the best indicators for me, but you need to, again, spend time with it. It's like you need to build relationships with every single thing that you are using, like every single PD array that you are using. Like that's exactly like you are backtesting every single PD array in order to build relationships with it, to understand how it actually works with you, how it supports your energy or how it depletes your energy. And whatever depletes your energy, you throw the fuck away, because you don't need it. You need only things that make you stronger. But in order to understand whether they make you stronger or not, you need to actually spend time with them. That's the same thing you actually do with people. You don't know whether this person is going to actually be good for you. You need to spend time with them. But yeah, with people a little bit easier, because you can use astrology to understand whether these people are actually supporting your energy or they are depleting you from the very beginning. Because I'm so grateful for astrology, to be honest. That's saves a lot of time. Again, that's only for me. If you think somewhat different, please leave it in the comments. I would love to see your point of view and expand my own personal point of view through the mirror of you. Thank you so much. And okay, so now the next thing. So VWAP helps me to understand how long where I can potentially expect the price to reverse. And it also tells me where I can expect the price to, how far it can go, right? Sometimes it actually goes way beyond that and it never stops. But it is rather, it's some news event or Trump tweet or whatever. By the way, I want to notice that look at how price rejected after it took this liquidity. Normally, if you'd look at the support and resistance or whatever, you would never say that there was some liquidity even. You wouldn't even look at that. But there were orders that moved the price, and the price moved to 50% of that swing high. So I'm just trying right now to say that well, while ICT is the Wyckoff in with beautiful branding, with better branding, but anyways, it works, and I freaking love the man for sharing all the information. That's beautiful. um, okay, the next thing. This is just amazing indicator that I'm showing right now, and it is the New York Midnight Open. So it's basically the open of the first candle at midnight. By the way, we are using the New York time right now, UTC -4, New York, right? So what if the price over here is below the New York Midnight Open? That means that I can expect the price to reverse and go above the New York Midnight Open. Below the New York Midnight Open, there is actually an index or something like that. There is some indicator by some guy, some other trader who talked about it and who created it. But it's some mathematical. I didn't actually study about it. I'm just using this line. This blue line actually tells me what am I looking for. And many times, if the price is already below the New York Midnight Open, it means that the price is going to reverse. There are 2 or 3 times when it didn't happen and prices continue trending up, but it was rather abnormal. Okay, we are below the New York Midnight Open. Then the next thing is the manipulation. I'm actually measuring the lag of the manipulation, and it means for me how far did they go into the liquidity to grab it in order to reverse. And I don't know how to actually measure it, and I'm measuring it from the previous sell side liquidity. So we are using this level, right? The previous swing low. So this is the swing low, intermediate term low, call it whatever. We generated, now it is a short-term low at this point, and this is the intermediate term low. In this intermediate term low, the difference between the short-term low and the intermediate term low actually makes sense. And many times it is around 30, like on average, it is 31 points. In this case, it was 7 points. That's interesting because if I gather enough data for me, even if it's not going to be 100% accurate, this is an information for me. And that's exciting for me. Now I'm looking for the displacement. How far did the price travel after it grabbed the liquidity? And in this case, it was 19 points. On average, it travels 55 points, so it's almost 2 times more than the manipulation. Why do I need that? I need it to build conviction that the price is going to freaking reverse. This is why I need it. And while many of those indicators are useless and maybe they just complicate my system, I admit that, but they don't. For real, they help me a lot. And the more I actually pay attention looking at them, the more I build a relationship with them and the more they work for me. And it doesn't actually matter if it works for anyone else, I'm just sharing. Now we're looking for the market structure shift. There was no market structure shift on 5 minutes. I bet there was something on 1 minute, like over here or something like that. But I cannot say that there is a market structure shift on 5 minutes before my entry. This is what is important, before my entry. Here's the market structure shift, and here could be your entry at the second, at the second phase of the delivery on 5 minutes. But am I looking to enter there? No, I'm looking for the smallest stop loss ever. And over here, I actually have it marked the way I entered because I was hesitating and I didn't put my limit order. But if I use the limit order, this would be my entry at 0.75 because many times they do come back to this 0.75. Rarely, when we take some old low or old high, we are just reversing straight away and we are creating the V shape reversal, but I need data to prove that. I'm just saying from my personal observation, and it is subjective as hell, because I cannot tell you that I have the freaking database that confirms that, but this is what I believe in. Again, move points. This is the move that I took. I think I caught it somewhere here. I didn't hold it through all the things because I'm learning to hold. Sometimes it's hard for me, so that's why I'm building so much conviction and so many things. But right now I want to see what was the best case scenario. What I could do. And of course I logged in what I did, exactly how I did it. But when I am collecting the data, I'm collecting the best data that I can. I don't need just pieces, I need the full move in order for me to understand what it does. Like for example here when the price started rejecting, I was able to wait for, okay, if it holds 50%, or if it holds 50% of Asia or 50% of this swing high, then potentially I can stay in that trade. Of course the price later on just dropped, whatever, but it was slowly grinding up. And that should be enough for me. Then okay, the next thing, move points. I'm measuring how many points the price moved from my entry until the delivery, the highest point of the swing high, to the intermediate term high in this case. It was 90 points. Again, as you can see here, on average, Nasdaq, from my point of entry, from this OTE that happens, I actually saw another guy. He was the first guy that I watched when I started trading, and he now enters at the breakout over here. Safer option, and it is good for the bigger accounts. For me, while I'm trading a small accounts right now, I'm risking a little bit more, and I'm okay to be wrong here 1 or 2 times, because later on I'll be right 15 times more than that. And yeah. Now, what I was using the OTE, FVG, Asia sweep, 50%, New York Midnight Open was used, previous day high, previous day low, not, but there was a weekly open, and I'm going to add this line. This orange line is the weekly open, and I'm going to let it be there, because later on with time I'm going to understand what actually was used and what actually was not. By the way, I need to separate this into tickers, into checkboxes, and and check where I used them and what I did not use, and then see the percentages over here. I'm going to do it because this is going to make my strategy, my data way better, because if I see that most of the time I use OTE, I see here, most of the times 90% I use OTE, then OTE is the thing, is my go-to forever. Then if FVG happens to help me like 70% of the time, then 70% of the time I'm going to be using that. Again, my stop loss at the swing low. In some modals, I could be using my stop loss over here if I'm swing trading this. If I'm waiting for the long swing and I'm waiting for the price to deliver into -1, into 1 standard deviation, right? Then my stop loss would be at -1 standard deviation or below some liquidity. But anyways, in this case, I was using the swing low. And this setup shows up at least 2 to 3 times per week. At least 2. Rarely does it happen to be only 1 time. Take profit. Let's say that it was around 0.5 standard deviations, because it was like in between these two. So if we use the Fibonacci here, then we use the EQ, then we see this is like, it was a little bit more, but anyways, let's say that it's 0.5 because it was the most obvious one. Fibonacci standard deviation delivery. So I'm using trend-based Fibonacci. Of course, there is an ICT type Fibonacci, this type of standard deviations, or the trend-based. I like the trend-based more. I find it more, but depends on how you use it. I'm going to share some tips and tricks right now. So if you're using this one, Again, it's a little bit dirty right now. I don't want to close it. Um, Anyways, I close it. If you're using this one and you're trading Nasdaq normally after this accumulation and the explosion is going to travel to -2, -225, so into this range from -2 to -2.5 standard deviations, as you can see into this box. This is going to be a distortion block. Over here, the price should be in some sort of a consolidation in this distortion block, and then it should retrace back into the measuring gap. In this case, I use this one. It's normally the fair value gap that is created in the 50% of the swing high of this swing, right? There is no like there is one, right? And after it grabs liquidity again, it's going to have a second phase of delivery. So over here, it was safe to buy again or add into your position. I didn't do that because I'm still learning to do that. I'm not so I'm not trading for 20 years, right? I'm only trading like not even a year. But I know I'm gonna be celebrating a year soon. Celebrating, come on. I'm gonna be in front of the charts collecting data. So the thing is, that's this. I can enter and I can add into my position over here. And or I can set the limit orders or whatever. In this case, it just was beautiful delivery. Like it's just beautiful to look. Yeah. Okay, let's take a look. Fibonacci standard deviation delivery. In this case, it delivered into 3.25, right? The maximum. But I am using the other one. So yeah, after it retraced at -2, -225, like from the distortion block, and it decided to deliver again, it is safe to expect the price to deliver to -3.25 to -4 standard deviations. Okay, I delete this. No, that's not what I need. I delete this. And maybe I'm going to leave it. I'm just going to add another thing so I have all the information needed. So this is the trend-based Fibonacci. I use it from the intermediate term low to the top of the displacement and to the to short-term low. So intermediate term low to the top of the displacement and back to the intermediate short-term low. Again, I'm measuring them normally and the price delivered into 5 standard deviations. Easier. Okay. Now we'll look at the time of entry. My entry was at 2:15. 2:15 a.m. It's all the time changing. 2:15. Now time exit. I exit at 7:50. 7:50 a.m. still, right? 7:50 a.m. 7:50 a.m. I'll move it to the upside. 7:50. Right. Then the R multiples, 15. Hours held. Let's look from here. Why am I looking for this stuff? Okay, so 5 hours. That's interesting. You see that on average, all of those trades that I'm taking, the same setup every single day. It looks the same. It's just organized every day the same. It delivers almost every day the same. Almost on average, I need to hold it for 4 hours, and almost every single day it delivers to 3 standard deviations. So if I'm not sure, if I don't want to hold all of them, if I don't want to hold I just wait for 3 standard deviations and I close my position. Here I closed at 2.25 and everything because I was, I think that was the day when a couple of trades open. I was in a drawdown, huge drawdown algorithmically, and uh, and here I just didn't have any emotional capacity to hold. But even if I just moved my stop loss into break even, I'd be fine. I'd be fine for the whole day, almost. Like only then in the last part of the day I would be taken out by the news. Then I'm writing the instructions of what happens and etc. First Asia low taken, 2 displacement. This is basically my checklist. And I'm writing it every single time over and over and over again until it becomes automatic. So what was there? VWAP -1, 3 RSI oversold. It was 4, sorry. 4 RSI oversold, 5 below NYMO, 6 market maker MMBM, and 7 entry OTE, 8 stop loss swing low, ITO, 9 TP, take profit, 5 is the trend fib. I say which Fibonacci I use because this actually helps a lot in order to understand, because sometimes I can use this one because there wouldn't be any retracement, and then I use only manipulation leg in order to understand. Again, there is one thing that I think I'm doing wrong. The manipulation leg is all this move. And when I'm measuring the manipulation, I'm only measuring how far it got into liquidity or the wick. I still don't know how to use it properly, and maybe I'm going to redo it many times until I understand what actually makes sense. But yeah, that's it. What I rated, it is an A setup for me. I don't know. It is an A setup, delivered beautifully. I took it beautifully, even though I was very, very stressed. Then I add a screenshot, and that's it. After I collect enough data, so like for starting from 50 to more trades, then I get into ChatGPT and then I ask him to create the data. Back, strategy metrics. Below is the clean numbers, first read out of 29 trades you logged. I don't remember if this is actually the one. Swing high, swing low is the trades. There were probabilities. Also ultra compact probability sheet. So all the information that I need is actually here, but this is not exactly the one that I used. Anyways, after you get this information, you can ask stupid questions like, okay, what is the best time for entry for me? And for me, it's 2 to 5 a.m. After 5 a.m., there is no need for me to enter because statistically the price already started, already moving. So it's all the same rules from ICT, and you can just take them and listen to him and just go about it and live your life. But even though you trust him your whole life, or anybody who teaches you anything, you need to still sit down and backtest it. That's why none of the single guru is going to ever allow you to like provide you with all the necessary reps and everything. You can listen to 100 strategies, even trend lines. Oh my god, Tori trade, she's amazing. Come on. Trend lines is just another thing that I want to, when I get into swing trading and I can combine all this knowledge with the trend lines, and that's gonna be beautiful. Again, so this is my video on the backtesting. I know it was a little bit scattered. It's more of us having a talk. Maybe later, if this plays well, or maybe if I have an inspiration, I'm going to create the proper one where everything is set step by step. But again, I don't want to make it very hard-coded because every single strategy has its own variables. even though we are using all the same stuff, but for some people, RSI is going to be good. For some people, the stochastic is going to be good. It's all about you. So it's better to try them all. And that's why, like, even I agree with ICT. He said, like, first half a year, just look at the price. Look at the price and log every single day what would be the best trade that you have taken. This was actually what he said that, but I didn't understand that. I thought that I need to be able to predict it right away, and I would sit for hours trying to predict it before it actually happens, before having any conviction, which was absolutely wrong. So yeah, so that's it for today. I think it was a long video, and maybe like this is the comfortable way of me sharing the information. Maybe I'm going to change it with time, but anyways, yeah, thanks for your attention, and I hope I didn't hope. I don't hope. I don't hope. I thought that I thought that screen recording just died. Yeah, I don't hope. There is only statistic, reps, and stuff. Hope is for weak people. Bye.